to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
Well, welcome back to the Wild Wild West. Oh, man, I don't know if, most people have been watching. It is unbelievable how fast the market moves. It's mind-boggling. It's unreal. Yeah, just within the last few minutes of the close yesterday, the market moved over $1 trillion. $1 trillion. I can't believe it. It's just it's unbelievable. And the speed is just crazy. By the way, those are not people doing that. Those are computers. You can thank the computers, the program traders out there that are contributing mightily to the increased volatility. But there's a lot of good news. There's a lot of good news. I can't believe it. The market now is actually where it was in 2000, near the end of the year in 2017. It's actually near the end of the year. I don't know if you've looked at the calendar, but it's 2020 now. And it was 2000. So if you feel bad because you missed that big move, guess what? You got a second chance. And you know what? The economy has grown significantly since then. So prices are lower, but the value is higher. That is awesome. You will rarely get an opportunity like this. And now, it might not be over. I mean, the selling could continue. One of the reasons now that, we like to carry bonds in our portfolio, now you know, always carry cash. Always have some short-term bonds in your portfolio. The equivalent of having some cash. Always do that. And it's it'll come in handy one day. Like now. No, I feel bad. The coronavirus is out there. It's kind of a big deal. It's slowing things down, but I think the reaction is overdone on a lot of different ways. But it doesn't really matter whether I think what I think. It doesn't matter. It's going to slow things down a little bit. As it slows them down, GDP goes down. When GDP, I think the max decline of GDP growth, it was minus 3% or so. I think at the financial crisis that started in 2006, actually, the market bottomed in 2009. The housing market started to go bad in 2006, accelerated through 2007. November of 2007, the S&P 500 finally rolled over, started going down. The small mid-cap stocks have been going down for about 8 or 9 months before that happened, which is another thing that I'd like to point out about this correction. It's not one or two singular groups that is dropping. They are all going down. Every stock category is getting crushed, which tells me this is just a pure panic. Pure panic. This is how Templeton funds really made their way in the world. Literally, they had such a sterling track record. It was unreal from the 1950s up through the 1990s. Track record was over 15% a year. Can you imagine going 40 years at 15% a year? And the fund managers there used to say, and they weren't kidding, they would say, when's the best time to buy? They literally would say, when there was blood in the streets. They would go into these third world countries that were going through revolutions and buy stock. So you had to be very, very adventurous to invest in those funds. But they did incredibly well. And I think this is one of those opportunities. If you've missed the past couple of years, guess what? You've got a second chance. Now, is it going to go lower? I don't know. It could. The slowdown in 2000s, the whole housing crisis, it was only a 3% drop in GDP, and the S&P dropped 57%. How many times have you heard me talk about how much stocks go up and down relative to the news? How much more accentuated the price movements are than what's going on in the actual companies. It's not what's happening in the companies. It's what people think is going to happen, and people are emotional. The vast majority of people really don't know how to read a financial statement because that's not what they studied in school. And the vast majority of people only know what they hear on television. And television, bad news gets more play than good news does. So I think if you look past what's going on right now, and by the way, when you spend money on something like this, when the government issues a $50 billion rescue package, once the money gets created and circulated, it's kind of like electricity. It's there forever. It's just going to dissipate and then collect again, dissipate and collect again. Once you've increased the money supply, it's there forever. And once is it a huge amount? No, $50 billion is really not that big a deal. Psychologically, you can see what happened. Last few minutes of the day, the market just catapulted. So that tells me that this is an emotional replay of 2007, 2008, 2009. I never thought people would panic that much in that time period. But I had a plan. I have a plan now. The plan's always going to be the same plan, slightly different depending on how much fluctuation you're willing to put up with. The bonds in our portfolio, after being a big drag on the portfolio the past 3 years, guess what? We're glad we have them now. Everybody's glad we have them now. And it's a great thing. And I really think our best days are ahead of us by far. As a country, as an economy, the best days are in the future. You can bet on that. I am. And I'll be continuing to buy. And I'm going to, instead of buying just the mix of stocks and bonds right now, if you're going to be working for the next 10 years or so, take your 401k contributions and make sure they're going into the stock, or a larger portion than you normally would, into stocks for now. Tune back in near the end of the year. We'll see if we cut that back somewhat. But I think this recovery is going to be one of the quicker ones that we've ever had. I think the stock market is going to go up way before the news gets good. The stock market will go up long before this thing is defeated. It's kind of the same way it's happened all the time, every time. Shouldn't say all the time, but most of the time. What happens is, in fact, the economy didn't bottom out until several months. I think it's about 9 months after the stock market bottomed in 2009. And if you'd have waited for that, you would have missed half of the move. You would have missed a huge amount of the recovery. So don't watch the news for your ideas of when to invest. Go back, get a plan. If you don't have a plan, call us. I'll tell you what we're doing. Actually, it's kind of a big deal. Rebalancing has got to be a big deal. And I'm going to start to focus exclusively on that whole process. It's hard to do, incidentally. When you've got a balanced account, you've got some stocks, you got bonds, you have a little bit of cash. You go to rebalance that. Let's say I'm an average 60-40, which is typically how most professionally managed accounts are being managed these days. And it's a good thing. And here's why. That 40% that's in those short-term bonds, it didn't drop like a rock. The 60% got kicked around pretty good. So now people are glad that they have some of those because they're not down nearly as much as the stock market is. Now the rookies or the novice investors are going down, yeah, but I'm down. Okay, you can't avoid that at all. Well, actually, you can avoid that. Keep all your money in CDs and try to get by on less than 1%. Those are your choices. Keep all your money in CDs. Keep crying in your oatmeal. And by the way, that's going to turn into saltine crackers one day. No. But there are so many good things that are happening, and the rebalancing is the key. It's the key. You don't have to know when the market's going to go up. You don't have to know when the market's going to go down. You don't need to know that. You don't need to know that to be successful, to be a successful investor. You don't need to know that to beat the average investor. The average investor, by the way, doesn't do very well. You don't want to, if you want to do some research on that, there's a company called Dalbar, Dalbar. Look it up. Google it. Buy their report. It's only $800. I buy it every year. Shows you how the average investor has done over the past 20 years. Might make you feel a little bit better. Yeah, and the average investors, anybody that's pulled money out of the market over the past couple of weeks, they feel like a hero. I got news for you. You're not a hero. You will not know where the bottom is and trying to get back in. Now you got to make another call. You got to get back in before it goes up past the point that you were a seller. Because if you don't, you get to join the 19 out of 20 people who try to do that and just fail miserably. So, see, the cost of being successful means you're going to put up with a certain amount of fluctuation. That's the cost of being successful. You can't avoid the fluctuation. Everybody that tries to avoid the fluctuation loses. The people who say, you know what, I'm willing to accept a certain amount of fluctuation. I'm not going to panic. I'm going to stick to that plan. And let's say my fluctuation is 30%, which is pretty much how it's going to have to be if you think you're going to make more than 4 or 5% a year on your investments. I'll get to that a little bit later in today's show. But you want to make more than 5% a year on your investments, and interest rates are only at less than 1 on CDs. And you're going to have a fluctuation tolerance of about 30% or so, which means you'd have to have about 60% or better into stocks, the rest of it in relatively short-term bonds. So if the stock market did another 2008 and 2009, went down by half, you'd only be down about 30% or so. How is that? By the way, you've got a whole bunch of money sitting there in those bonds ready to be put to work on the stock side. So if you rebalance at that point in time, what does that mean? That means the stocks are down. You're going to take some of the money out of the safer side and buy them when they're down. Are you going to try to buy the bottom? Most of the dummies will. They'll try to figure out what that's going to be. You know what? The only reason I have a gym membership to this one health club is because when I'm running around the track, I hear people there talking about the stock market, and it just makes me, I don't know what it makes me, actually. Gets me a little angry sometimes when I hear the stupid stuff that comes out of their mouths. They're not clients, so I don't talk to them. I'm just listening. But it also encourages me to stay in this business because people need help. A lot of people don't know any better. And the people that are the boldest and the most sure and who sound a lot like me, actually, the ones that are, I know what's going to happen. This is going to happen, then this is going to happen. Don't walk away from those people. Run. If anybody's telling you they know what's going to happen in the next 4 or 5 years in the stock market, they're full of it. They have no idea. And if they did, why didn't they tell you about this? Why didn't they tell you 3 years ago the market would be back to where it was then? If they knew. They don't know. And I'm telling you, you don't need to know. What you need to know is develop a plan that takes that into account, that you can't know. I mean, think about that. Do you think airlines, they fly cross country, and when there's a storm, they wait until the storm goes away to launch that flight? No. You know what they do? They alter their behavior. They don't fly right in the middle of the storm. They go around it. They make an adjustment. That's what I'm talking about, making adjustments. Sometimes they can go higher and get above it. Sometimes they have to go out of their way. But they know what they're going to do, and they're going to make an adjustment. They have a plan. And if your plan doesn't include adjusting, then you need to get a new plan. You need to adjust. And you need to make it, especially today. You don't get these opportunities all that often. You're not going to get these opportunities all that often. I can't believe it. I was talking about how valuations on some companies were slightly high. Not anymore. And actually, what really is amazing is a lot of the more conservative companies are down more than a lot of the aggressive ones. That is hilarious. I mean, if you're a long-term investor, it's hilarious. If you're a short-term investor who was counting on that money for your vacation next year, or you were going to buy a house next year, you shouldn't have had that money in stocks to begin with. You need the money within 5 years. That should not be in stocks. That's another reason that we have, 35, 40% of the money in bonds. Why? Because you may need to take some money out over the next few years, and you're not going to want to take it from the stocks if they're down. And if you're taking distributions, let's say you're at that, you're retired and you're taking distributions each year, you want to keep at least 5 years worth of distributions in short-term bonds. Why? Because the market is very, very, very difficult to predict over anything less than 5 years. And 5 years is not that easy, by the way, but it's a whole lot better than 1 or 2. The longer you look, the closer the correlation is. I know that messes everybody up that's not a statistician. 7 to 10 years is really the time period that you want to be thinking about in your investing. And if you can't lock that money away for that length of time, don't put it in. Because you're not investing, then you're gambling. You are a gambler. You just don't know it. You don't realize it. And I know there are a lot of websites out there, a lot of people that say, no, that guy doesn't know what he's talking about. Now that I hear the music, I got to take a real quick commercial break. You're listening to Bill Bullington right here on 1420. I'll be right back.
Give me something that I can believe in, and I'll share it with the world for everyone to see.
And we're back. You're listening to Bill Bullington. I'm here every Saturday morning from 11 to noon on 1420. You can also catch this show on the Fish's website, 955thefish.com. You can catch it on my website. It's on iHeartRadio. It's in iTunes. Feel free to give us a call today, by the way, if you have a question. 216-901-0945, 216-901-0945. I'm going to go to the phones right now. And I've got John.
Hello, Bill. I think this is the best time, since the families are going to be sitting together. They should talk about the basic ideas of capitalism, and also talk about Milton Friedman and free to choose. Things, sky is not falling. The Federal Reserve Bank is around the world. They don't have too many tools left anyway.
Right.
So I think budgeting, of course, I'm not talking about the politicians. I've given up on them a long time back.
Yeah.
The balance, the budget.
Right.
Continuing resolution, oxymoron. There's nothing is continuing. And negative income tax the same as earned income tax credit. I think people don't understand that because we don't teach these things in high school.
Right.
It's sad why we don't practice capitalism properly.
Oh, I've been
pseudo, not even crony, pseudo capitalism. Yeah. And right now, they balance the budget. The last minute, of course, we do something for the bookkeeping shell game.
Sure.
And
well, you know what my opinion is on that? It's always been a shell game. And I'm amazed that inflation hasn't been much higher than it is. And I know you know what I mean by that.
I know. I see. We always quote Kennedy, the water rises, the boat rises and everything.
Right. Mm-hmm.
The only thing is, these are not the old boats. These are inflated things with a hole in it.
Right. Yeah.
You go. No, I hope they have life jackets, unless they go to Shark Tank and come up with a new idea.
Yeah.
See, I'm not a negative guy. I think it's sad that we don't teach capitalism properly. We don't. Now that the sports is gone for a few weeks, this is the best time to tell the kids what capitalism is all about.
Absolutely.
And what you see is now what you get. And bookkeeping is not double entry in different way of accounting.
Right.
Don't count twice.
Right.
It's sad. I'm not, when it's sad, I'm laughing at it because I have a lot of faith in it. Japan has survived the last 30 years, right?
Yep.
Okay, so I'm a sky is not falling.
Right.
0 and 1, 2000, everything went, oh, yeah.
Yep.
And supply chain, of course, Cuddalo doesn't understand, Navarro doesn't understand supply chain. All that I know is when you go to Walmart, somebody will say, welcome to Walmart. Instead, they'll say, welcome to tariff.
Yeah.
You see, it's not a humor. I think we forget the basics of capitalism, and nobody's going to pay. We always talk about...
They've never taught economics in high school.
That's right. And there is no such thing as free lunch. How about breakfast? That's the best meal of the day, I tell them. I miss my teaching my classes.
Yeah.
So you have to put up with me today. That's all. Have a nice day.
Thanks,
I got
too.
a lot of faith in it.
All
Bye-bye.
right. Me too.
Bye-bye. Bye-bye.
And I'm going to go right to another John. Hey, how are you doing?
Hi, Bill. How you doing?
Good.
Yeah, I had the pleasure of meeting you a couple of years ago at one of your seminars.
Oh.
And I was a broker for 12 years. I left the industry back in the 90s.
Okay.
And one of the tests I had to take was the registered options principle.
Yes.
And the thing that I'm always amazed at is the people that have substantial amounts of money in their portfolios, or in stocks in their portfolios, don't protect themselves with deep out-of-the-money puts. People should have been making a fortune the last 2 weeks because they've had deep out-of-the-money puts as insurance.
Well,
and I don't know why people don't talk about it.
Yeah.
They just say,
well, I'll tell you
well,
what,
wait here, it'll come back. And
I can tell you exactly why they don't talk about it. And by the way, that's called the Series 9, the Options Principles exam. I also took it. And you and I are some of the few people that have ever decided to sit for that. Here's something that they don't teach you in the Options Principles exam. The vast majority of people do not understand hedging, and they don't understand portfolio insurance. They look at it as a pure cost. And that's why it's not being done. That's why they don't implement it. They don't understand it. Yeah, it's kind of like your homeowner's insurance. You pay the insurance every month, but you don't complain when your home doesn't burn down. You know what I'm saying?
Right.
But nobody gets that, and everybody's fixated on just the pure cost. They're only looking at the cost, not the protection that they're buying or the protection that they're getting. I understand exactly what you say. In fact, that Nassim Taleb, the Black Swan, that's basically what he was saying in his book.
Right.
And
right.
These big things do happen, and the payoff is, it doesn't pay off that often, but when it does, you're really glad that you did it.
Right, and then you have
by the
cash
way,
to reinvest when the stocks are lower.
By the way, try to get that through your compliance department at a major firm. That is a bear. They gave me they gave me all kinds of problems over that. And rightly so, I guess, because the people they don't understand it. The individual investor out there has no idea what the carrying costs on an out of the money option are. They have no clue. And so when they're paying that month after month after month, and they go, well, this hasn't made me, it's only cost me X number of dollars. Yes, but see, this is like homeowner's insurance or fire insurance. It's not going to happen very often. But once it does happen, you'll be glad you have it. And I'm telling you, try to market that to the general public. Good luck.
Yeah, but on an individual basis, I mean, you shouldn't have any trouble getting that through your broker.
Well, and by the way, if you have more than 10 clients, you have to give all the others up, because actually getting those trades executed, good luck with that.
Yeah, but I mean, me as an individual person,
you as an individual
should have no problem doing it.
Yes, but you passed the Options Principles exam. 1 out of 1,000 advisors ever passes that exam. Okay,
right.
So you are not like the general public. You are like way advanced. So
yeah, but I wish, I wish I could convince some of my friends who, I have one friend who, a couple of years ago, unfortunately inherited a lot of money because his relatives died, but he has a couple of $1 million invested. And before he even inherited all that money, he did a terrific job on his own. And he was into quite a few mutual funds. And back in the 90s, he was heavily invested in in the healthcare sector. He made a ton of money there, and he did a real good job. And he's got most of his money in a very, very big firm. And, I saw him 2 months ago, and my concern was about the election. I'm not looking at any coronavirus. I was just saying,
well, see,
I'm really concerned that if we have a new president, that market is going to get killed, at least temporarily.
Well, I wouldn't. You can't
yourself.
prove that, by the way.
No, you can't. But I'm just talking about protection. I'm not talking. It's going to go one way or the other.
Right.
I mean,
it's only got two directions,
obviously.
Right?
And another thing people have to understand: these markets are crazy. But for every buyer, there's a seller, and vice versa. So somebody has been buying as the stocks have been going down.
Sure.
Otherwise, they wouldn't be trading.
Well, I've been one of those people who have been buying for about a week now, and the last week's been pretty painful, right up until Friday. Yeah. But that's okay. I get it. I understand. And see, here's the issue that you're feeling the angst with, that, and everybody that's an advisor feels this. The things that people should do are incredibly difficult to get them to do. And people don't behave like they should behave. They behave like they want to behave. And a lot of them don't know, and it's not being taught. And actually, they should start teaching this stuff in high school. They literally should start teaching this in high school. Get the kids used to it. I remember when I was new in the industry, I go to my man. I read something Peter Lynch wrote, and I wasn't actually new. It was a few years, but it was actually Warren Buffett at the time. Warren Buffett said, if you can't stand to see the value of your stocks drop by 50% or more, don't buy stocks. And I went, I go, what? I go run into my branch manager and say, hey, is this true? Right. And he goes, oh, no. He's just, that doesn't happen. And I was like, oh. And then after I got enough money to be able to go and buy these really expensive charts, which most of them were done by hand back in those days. I looked and I saw, and I was like, no. He was telling the truth.
Yeah,
that was the truth. My branch manager was afraid that I wouldn't be able to sell anything if I knew the truth.
Right.
And the big firms today, they still talk about standard deviation. They call it standard fluctuation now. They've been changing the language a little bit. And standard deviation, so 16% is the average standard deviation. That's what people think is their average risk. That's what they think their risk is. Okay, now that they're down over 20% in less than a month, I wonder how they feel. Yeah, that's not.
Well, I remember October 19th, 1987. I was a broker in a discount brokerage house, and back then it was really it was the Stone Age. It's amazing to think back then. We had a ticker tape in the office, and it was running in a fast market, and they told us at the home office that we were 25 minutes behind. The tape was 25 minutes behind, and people were walking in wanting to sell at market orders. And I said, I can't. I have no idea what you're going to get. We see General Motors fly by at 38. I say, I don't know if it's 38 or 28 or 10.
Right.
I can't put in a market order.
Right.
And we took 10 days to get confirmations on some trades.
Yeah.
It was an absolutely insane day.
I remember those days.
Yeah, I remember going home, going to the grocery store, and looking around and seeing all these people like nothing was wrong. And I'm thinking, my God, you don't know how close we were to a total economic collapse. And everybody's walking around like, nothing's happening. And now you contrast that with today.
Well, you know what?
Everybody's
those guys that were walking around not knowing and acting like nothing was happening, guess what? They were right. They were absolutely right.
Yeah.
That's the thing about the economy. And there's one class I think should be mandatory for every college student. And actually, they should teach this in high school, too. It's called Money, Credit, and Banking. At least that's what they used to call it. But it explains how a fractional reserve banking system works and how you can actually grow your way and heal yourself out of these economic issues. The natural result of that is going to be inflation. You need to learn how to deal with inflation. The best way to have dealt with it over the past 100 years or so has been the stock market. But you don't go all in. You don't try to time the market. You develop a plan. Most people are going to be suitable for a balanced approach. Stocks, bonds, cash. The hedge is the fact that you have bonds and cash, especially if you're not long bonds and you're not confusing junk bonds with high quality treasuries. But all that stuff needs to be taught. I think they need to teach it in high school and quit teaching people how to balance a checkbook. When's the last time anybody balanced a checkbook?
Yeah, that's right.
That is killing me.
Yeah. One more thing, and I don't want to take up your whole show. You mentioned The Black Swan. That's Norio Rubini, who wrote that book. Well, he just mentioned, I believe it was a week or 10 days ago, he thinks the market could down 40% because of this. And he's about halfway there.
Yeah, but you'll know, though, that he never puts all of his money on a single bet. It's a very small percentage. It's just leveraged really highly. I tell people all the time. By the way, I got the commodities license too. If you really knew which direction the market was going to go, you buy an out of the money call or put on a futures contract. You'll get rich. If you could call 1.5% move once a year, you would never have to work. You'd have Warren Buffett calling you for tips.
That would be a nice call.
Yeah.
All right. Well, thanks a lot. You take care and hope you stay well.
Thanks. You too,
and
John.
maybe I'll catch you at one of your next seminars.
Sounds great. Awesome.
Okay. Thanks a lot. Bye.
Yeah, I think we have a couple minutes till commercial break. That's good. So, by the way, if we kind of lost you there on that conversation, that's because he's was in the industry. Don't worry about it. It's actually a lot simpler than anybody thinks it is. In fact, a stock is only worth what people are willing to pay for it at that moment in time. And that decision that they make, especially in times like these when people are highly emotional, they're not logical. That's my whole point against the rational analysis or a rational investor. Modern portfolio theory, rational investors will do what's really they have that guy was not, whoever wrote that, and I was not present. He was a mathematician. And there you need to use math, but there's some observance that other people in the markets are not using math. They're going on this totally based on emotion and price movement. There's a big difference between value and price. And that's the whole basis of any value-oriented fund, which incidentally, a lot of funds are based on underlying values. You can do the calculation. They're math. Most of it's relatively simple math. When you're looking at stock valuations, it's relatively simple math. Yeah, and that's what gets me excited. When I see this, the past 2-3 years, people were feeling really bad that they had missed that big run-up. Well, guess what? The economy's bigger than it was 3 years ago, but the share prices are back where they were 3 years ago. It's a better value. The value's there. Why? Because the price has come down. That is awesome. And it's not like this is going to stop. 5G is not going to stop. This is probably 5G is going to accelerate. You know why? Because 5G is being used by hospitals to analyze test results. Think about that. The thing we've been talking about now for, a couple of years. We come back, I'll talk about a couple instances that might be able to make you some money over the next few months, actually. So stay tuned. This is Bill Bullington right here on 1420.
Oh, Lord, my God, when I in awesome wonder consider all the here and now, I'm in the fire and above my head.
And we're back. Hey, you're listening to Bill Bullington. I'm here every Saturday morning from 11 to noon. If you'd like to learn more about my firm, go to bullingtoncapital.com. We do have a seminar coming up there, and there's a description of it there. Go to the seminars. I actually don't have time to get over there to read it right now, but it's bullingtoncapital.com. I believe it's going to be April 30th. Hang on one second. Yeah, this is going to be good because right now I have with me, is this Terry Agner?
It is.
Hey, how are you?
I'm good, Bill. How are you?
I'm really good.
Good.
I'm all excited about the historic tea event that we're going to talk about that's coming up here very, very shortly, April 26th.
Yeah, thanks for letting me come on and talk about it. We started a program down at the Armory, called the Living History Program, and it's an educational platform, and we are doing a fundraiser so that we can raise some funds to be able to share all the historic characters, in the Cleveland community.
You didn't tell me about this when we were talking the other day about it, and I'm a little upset because I would have been really excited.
Well,
no, I'm not upset. I'm just kidding. But I really like if you go to the Grays and you look up the event. I didn't know this was about the bag girls.
Yes. Actually, if you go to Eventbrite, it gives you a description of the girls that we're having. It's entitled Misbehaving Women, and it's about Cassie Chadwick, who is of Millionaires Row fame, and then Josephine Baker of vaudeville fame. And these will be live actors that come in.
Oh, that's cool. I just want to tell the audience that Cassie Chadwick was also a swindler that lived on Millionaires Row, and the other lady that you mentioned was an exotic dancer.
Exactly.
That is funny.
And it should be really good entertainment. And while you're being entertained, we're going to have a historic tea where we'll actually feed you and give you tea. We're in the process right now of picking the menu and doing all the planning for it. Right. And additionally, while you're there, you can take a tour of the Armory, and right. We'll have some other things going on while we're there.
Yeah, and if you haven't seen the Armory, if you've never been there, it's worth going just to see that. If you've ever worked in construction at all, I worked with my dad for a long time. He was a carpenter and basically a subcontractor doing remodeling. And the cabinetry in there was done by hand because at the time they were making that, they didn't have factories around the greater Cleveland area that could produce that stuff. So it is amazing to see what those guys did. The whole building is very historic. It's nostalgic. I love it. So I'm really glad you're having this event there too. That's really interesting. Although I was much more excited about it reading about it before I started doing the radio show.
Well, good. Well, I'm glad you're able to let us put a shout out for it. It's going to be April 26th at the Armory, which is at 1234 Bolivar Road. It's that old castle-like looking building right on the corner of 14th and Bolivar, right close to Playhouse Square. And you can get tickets if you go to eventbrite.com and search Misbehaving Women. It'll take you right to the site, and you can order tickets right there.
And if you can't find them there, they can always go to Bullington Capital. I can forward you the link to that as well. So.
Oh, thanks, Bill.
Yeah,
that would be great. And there's also on Eventbrite, there's also a phone number for the Armory. You can call them to order tickets if you want. And that phone number is 216-621-5938 if you need any additional information. So,
well, that's great.
Again,
this is gonna be fun.
Well, good. I hope you're going to join us.
Yeah, I am. I'll be there.
Good. Excellent. Very good.
All right. Well, hey, Terry,
I appreciate you.
Thanks for calling, and we'll have to get you on 2 or 3 more times before this actually comes up.
Sounds like a plan.
All right. Well, have a good weekend.
Okay.
All right.
Okay. Thanks, Bill. You too.
Sure.
Bye-bye.
Yeah, Misbehaving Women. I'm just kidding. Yeah, kind of. Sounds really interesting. If you've never been to the Armory, that's a Cleveland landmark. It's really cool. It's there's a lot of stuff. You can actually Google it, and you can see a lot of. You'll know exactly where the building is. There's some pictures there on the inside. It's not like seeing it, in person though. So yeah, I'm looking forward to that. But I forgot what I was actually talking about before I took that, before I started talking about that. Yeah, it doesn't really matter. I guess one of the things I'd really just like to impress on people that, I know a lot of people are really afraid. This is there's a lot of information out there, help keep you safe. We're doing the right things as a country. They're doing the right things to slow this down. And it's going to work. I was doing a lot of research over the weekend. It's really interesting how they stopped pandemics in the past before we had advanced medicine. And I thought it was very interesting. During the Civil War, during the First World War, they actually had people going outside in mostly the summertime. I'm not sure what they did in the wintertime, but I know that in the open air and in sunlight, viruses like this have an incredibly difficult time surviving. So as it starts to warm up, that by itself will help. The fact that people got fresh air, the fresh air was actually a disinfectant and wiped out a lot of the virus. So, there's, instead of just relying on medication, there are some natural cures of ways of treating the symptoms. And I think that's kind of important for people to know. I went to, let's see, where was it? There is a website that's on this. Oh, it's called Worldometer. And if you go to Worldometer, WORLDOMETER, worldometer.info, there's a lot of information. It's following up on this live. It's putting up the data. Coronavirus cases, there are 150,000. The deaths, there are 5,600. Recovered, 73,000. Which leaves about 70,000 active cases. 65,000 of those, roughly 92%, are in mild condition. 8% of them are serious or critical. Under the closed cases, 93% have recovered and have been discharged. 7% actually died. So 7% is a big number, but 93% is a lot bigger. So realistically, I mean, it's, is it serious? Yes. Should you take precautions? Yes, you should. Is it the end of the world? Probably not. Things are going to get back to normal at some point in time period. And I think that really just trying not to panic is kind of a key. I'm really amazed. By the way, I've heard, and I've been watching on television how all these stores are out of toilet paper and they're out of water and all this stuff. Well, I just went to the Sam's Club near me, and evidently nobody knows where that Sam's Club is because they've got all kinds of stuff. So that's the one in Fairlawn, by the way. If you want to go visit the Sam's Club there was they had water stacked out everywhere, and I thought, this is kind of odd. I wonder why this is. And then I got home and I started watching television, and every other store is being, mugged by people who are looking for that stuff. So if you're looking for that, you may want to try the Sam's Club down there in Fairlawn. But anyway, it's it's very unfortunate, and I don't mean to. I'm not really making light of this. It's serious. You have to take precautions. If you don't know much about it, just get on the internet and read about it. It's a very bad virus, but it's still a virus, and most of the people that are really suffering the most are older, or they're already sick, and the vast majority of people who are contracting the virus are recovering. So I think it's important to keep that in mind. It's very disruptive, though. I mean, it's going to slow the economy down. There's no doubt about it. It will slow the economy down. The economy will pick right back up again because all the 7.5 billion people on the planet still have to eat. They still have to wear clothes, drive cars, live in housing, go to work. World will have to go on at some point in time, and probably not that long away. In the meantime, it's really important to just try to relax. Do what I do. I get tired of hearing the bad news. I turn the television off. I'll go for a walk, read a book. Do whatever you'd like to do. I'm flabbergasted when I look on television and I see all these people crowding into these stores, because that is just not the way it is. I live near Fairlawn, which is not, it's 20 minutes from here. And there aren't as many cars on the road as there typically are, and definitely not in the stores. So I guess if you need something, go down to Fairlawn. But I just don't know what to say, really. I mean, I'm not one to panic. I don't think this is the right time to be panicking. And life's going to go on. It's going to be a little bit slower for a couple months. Yeah. Oh well, you got to do what you got to do. But everything is it will recover. That's the nice thing about this country. The real magic here was the financial system and finally getting their arm around fiscal policy. That's what what a government does, and monetary policy. That's what banks do. We'll talk more about this next week, or you can call me if you'd like during the week. 216-901-0945 is the station here. They can give you my contact info. But anyway, thanks for listening, everybody. This is Bill Bullington here every Saturday morning from 11 to noon on 1420. Have a good week, good investing, and good luck.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
The preceding program has been paid for by Bullington Capital Management, LLC.